Hey everybody, it's Pete Renzulli. Welcome to today's broadcast and Stock Trading Pro. We have a ton of stuff to talk about today, and the big question, which we're going to use the Dow Jones Industrial Average as the proxy for what we're about to talk about, is can the stock market actually get positive for the 2022 calendar year, which would be absolutely amazing based on the way that the market's traded. We're actually going to do a little bit of a deep dive into the daily ticker, which is the newsletter that I publish every day. I thought it's kind of fun to really show everybody how I break the market down and come up with the best stock picks that I'm looking at right now. We're going to do a little bit of a deep dive into the market, into sector rotation. We're going to break that down into industry groups that I'm watching. There's two surprising sectors that actually led the market last week that I don't think in any way in the world that we would be leaning on that sector, those two sectors to lead the market higher. And I'm going to break that down for you, which really highlights the skill of tape reading for this year. I'm going to break that down as well. We're also going to talk about a book. There's a book that I picked up this weekend that it's by a trader who is very popular on YouTube. And I've never really listened to any of his stuff, not for any reason in particular, but I picked up the book this weekend and it's actually really good. I'm going to give you the book title and why I like the book so much. Obviously, I'm a big book junkie every day, kind of wake up looking to make things better. Hopefully you are too. That's probably why you're here watching these videos. I want to say good morning to Don. Don, how's it going, pal? Hope you're well. If I don't have a chance to speak to you, I hope you have a great holiday. Of course, thankful that you're a part of our community. So I want to dive first into, we're also going to talk about Tesla today. But the big thing we want to talk about is the Dow and how the Dow has traded this year. But there's also a big line in the sand in the S&P 500 that we hit on Friday. Now, if you're not familiar with running all the stats and all that kind of thing, just amazing 7 to 8 week run that the Dow Jones Industrial has had, where it came within 6% of being positive for the year of 2022. And we're going to break that down and why it rallied as hard as it did and whether or not it can still push into positive territory for this year. And I'm going to give you the three sectors that I'm going to be leaning on and one sector in particular that has been sideways for the better part of the last 4 weeks and is still kind of sideways, but there's news that came out that I think is going to affect that group, which is where we're going to see. We're also going to talk a little bit about inflation today. And while the rally that the stock market has had over the last 7, 8 weeks has been amazing, there's been some incredible opportunities to buy stocks. Have we really started to feel inflation yet? That's really the big thing. Like, has the economy really started to feel in our pockets where inflation is kind of like working its way out of the system, or have we not really felt that yet? And I'm going to share a news article with you that is really going to make you sit up and say, wow, that's interesting. I don't know if inflation's kind of done yet. So we're going to wrap all our heads around that as well. We got a lot of stuff to cover today. Obviously, you can tell I'm pretty jazzed up. When I had a vacation 2 weeks ago, I was really excited about that. Finally got kind of caught up on finally getting away. It was my first time away for the entire year. Went down to the Florida Keys. That was really, really interesting. If you've never driven over that 7-mile bridge heading down into Key West, oh my gosh, it's amazing. I'll try and provide a video. I'll post a video of what it looked like. It's really kind of looks like you're riding right on the ocean. It's amazing. So stick around. I'll be back in just 1 second. We got a lot of stuff to cover today. Okay, so I just want to make sure I say hello to a few people. Roberto, how's it going today? David Zemke, how are you? Gardner. All right, so we're going to get right in. I'm actually going to start out with the book that I was talking about. And the author's name is Tom Hougaard, Hougaard. I believe he's a Swedish trader, if I'm not mistaken. But here's the name of the book, and here is the author's name. So the reason I want to talk about this book, and obviously the name of the book is a little bit interesting, right? So we're going to break the book down in the context of what we talked about in the daily ticker today, because we're going to actually break down the daily ticker. And I want to highlight one thing right here, which is this, right? I think a lot of people can really point out that the market was offered a lot of opportunity this year, but probably exhausting. Today, this was a real year where you had to get in there and really earn your stripes this year. So I'm going to start out with the book, and then we're going to go straight into sector rotation and break down the ideas. But the subtitle to the book, and I don't know if you could actually see it down here. You probably can. Why Normal Thinking Never Wins the Trading Game. And he does a really good job of breaking down how most people think about the markets and how most people think about trading the markets and why most people lose money. Because quite frankly, most people are looking at it the wrong way. And we're similar in a lot of ways in that we talk about the market. I talk about it very specifically in our community as I'm running a trading business. And the reason I do that so dramatically inside of our community, and hopefully you're getting this from me on YouTube here as well, is because I want you to understand that you shouldn't be expecting to make money on every trade. You shouldn't be expecting that every day is going to be profitable. That sounds amazing, but it's just not only is it not realistic, it's also not necessary. And I think that's really the big epiphany. I think that's the revelation that a lot of people have when they come into our universe, and specifically kind of behind the curtains, where I spend a lot of time saying, stop being mad about one trade that didn't make money. Stop being mad that one day you didn't make money. It's about the month. It's about the quarter. It's about the year. You're running a business, and every day you are learning how to cut back and cut down on your expenses, which are your trading losses. Let's just face it, trading losses are a business expense, no different than any other business. But then your real job, once you understand that, you build a strategy, accept the losses are a part of the business, then your real job to really turn this into something special is to understand how and when to trade bigger. And when I say trade bigger, that doesn't always mean more share size. It can also mean holding winning trades longer and understanding the circumstances to do that. Now, we also have had a lot of conversations recently about the difference between day trading stocks and swing trading stocks. The massive difference between those two is how you build those positions. Day trading stocks, you can actually get in there with a little bit more aggressive position sizing on your initial entry because there's no overnight risk, and you can kind of manage that on a little bit lower time frame. Swing trading stocks is just smarter to be working your way into positions for the same reason that day trading, you can get into more shares. Overnight risk is part of swing trading. So it's actually smarter to build those positions. So the whole point is what he talks about in this book, and he kind of repeats himself quite a bit, but it's a really good book. I actually would recommend getting it. I got it like within one day on Amazon. Is he basically says that unless you finally get to the point where you accept losses as a part of running a trading business, as a part of being a trader. Now, again, don't let the trading business thing influence you to think like, I have a full-time job, I don't want to run a business. You're a money manager, right? Just think about it from this perspective that you opened your trading account to see that account grow over the years. So you're running a part-time business if you happen to be working somewhere else full-time or running another kind of business. But the point is this, okay? And he does a great job about this. He says the best loser wins essentially because when you accept the fact that losses are a part of what we do, and you quite frankly do not need a monster winning percentage to be profitable. As a matter of fact, he goes through some really clean examples of different winning percentages and how you don't need a high winning percentage. What you need is more shares on the winning trades, and you need to make more on the winning trades. It completely blows out of the water the mistaken belief that a lot of people have is that you need to win almost on every trade or every day or every week. It's not the case. Something that we talk about quite a bit often as well is that your percentage of wins from your edge, probabilistic, right? You know what kind of dollar amount you're going to make, the amount of wins you're going to have versus losses, let's say over 10 trades, 20 trades, 30 trades. Here's the big thing that a lot of people just simply need to learn. There is an uneven distribution between how your profit and losses add up. Now, what most people believe is you kind of have wins and losses and wins, and they just kind of like step up and everything's nice and easy and like there's one fluid chart, right? That's not the case. What you need to discover as a trader is eventually that you might make $10,000 for the month, and I hope you are. You might make $10,000 for the month, but 7,500 of that 10,000 might have come from 3 out of 20 trades you made this month. That's just trading in the real world. So you're basically running your business, paying some bills, making some small gains here and there. And then all of a sudden, a couple of trades don't come back. And hopefully you've learned how to manage those winning trades. And if you really are on top of your game, you understand that you needed bigger share size on those trades, right? So that's the first part of what I wanted to make sure we talked about today. Next, we're going to actually break down, and we're going to take a little bit of a deeper dive into sector rotation. and specifically over here over the last few weeks. You can see that we kind of had a 2-week holding pattern, and we kind of broke out a little bit last week when Jerome Powell spoke. But overall for the week, it still was not an outstanding week. Now, this is a big thing I want to get across to everybody. When you run these kind of statistics, and they're not that hard to keep track of, quite frankly, but they're a part of running the business. Raise your hand if you've ever gotten to the point where you're like, I stink, I should be making more money. What's wrong with me, right? Well, you got to ask yourself, was it fantastic market conditions that you didn't trade well? Or did you recognize it was tougher market conditions, pull yourself back and say, I'm not digging a hole? So let's take a look at this and really think about that question again. We've had almost 3 weeks of sector rotation that really hasn't given us anything to write home about, which means that you really need to be on top of which individual sectors are offering that money. So what I'm going to do right now, I'm going to break down my daily ticker newsletter. So that's actually the part of the research that I provide every day for our community. But I want to show you the progression of how to think through whether or not there's opportunity, where that opportunity is, and how you should then go pick some stocks to buy. Okay. But we're going to actually start out. The first part of this is weighing the market and what the market was like this year. And I hope that you can picture yourself in this journey, because we've seen we have so many members inside of our Discord community, and it's kind of fun because we have beginner members that are just learning what to do. We have some people that have been stuck at break even and now they're on the other side, and then we have some people that have been making money and now they're at a much higher level. So what I'm about to walk you through, hopefully you can picture yourself in here, and this is going to break down and ultimately get to the point where we're going to talk about which kind of ideas we're going to talk about within, and then which industry groups, and then probably some stock picks. Okay. So a friend asked me this weekend what I thought of the market in 2022. One word quickly poured out of my mouth: exhaustion. Raise your hand if 2022 has been exhausting for you. Type yes in the chat. It has been an amazing year. But I think really what's interesting is this year has probably felt a little bit tougher than it actually was. And I'm going to point out why in a sec, or how in a second. Simply, I think because the market went pretty much straight up in 2021. And when you have straight up and not really a lot to do, and then a lot of back and forth, and you really got to earn your pay, it seems like it's a lot more challenging simply because it's not as easy. But 2022 offered amazing opportunity if you understand order flow and reading the tape. So we're going to kind of keep breaking this stuff down. Okay. So the stock market provided a blue collar year, and that's absolutely what it was for me. There was plenty of opportunity, but you had to work for it. It was satisfying and deep learning, but your brain probably has calluses from the work, right? So I want to get this across. I just want to really make sure we're clear on this. What I'm doing for you now, what I'm showing you now, is the actual process that I personally go through, where I look at the market, and then as I'm breaking the market down, then I work into where is money flowing into. And then specifically, where are the best ideas, and then which are the best stock picks. It's not as simple as show me the pattern and I'm going to go and buy that stock. Our job, remember this, we know that stocks move up and down. Our job is to really determine what are the odds of getting follow through. That's really the big thing that we're trying to put together here. So if you think about it, I'm choosing to accept risk, but I want to accept risk when I built a really good argument that the odds of moving in my favor are pretty good. And that's where a lot of traders get in trouble, because I shouldn't say get in trouble, where they miss like that one extra distinction where like, why am I not making more on good trades? And it's simply because you didn't go deep enough into building that idea. Because let's remember this, and this is something you want to write down. We have a lot of Post-it notes all around the monitors, right? Is not every trade is the same. And if you are not doing a deeper thought process about which trade ideas are simply better, then you're not going to have more shares on better trades. Or even if you don't have more shares, you're not going to hold longer, and you're going to take quick profits because you didn't put in that work. So that's the process of what we're going through right now. Before I forget, I just want to remind everybody, our family is growing this year. Actually, we've expanded into options trading this year, and we've also expanded into Forex trading this year. We found some really, really amazing partners to be working with this year. We're bringing them into our umbrella. So if you're interested in something besides stocks, you want to add that to your trader's toolbox, we actually have a Forex trading webinar coming up on Thursday. And David Warner is our Forex trading expert. So if you'd like to join us on Thursday night, 6 p.m. Eastern, click that link below the video. It's in the description or directly below the video, and make sure you register for this. David has been trading Forex for 20 years. If you're not aware of some of the headline moving stuff that is going on in Forex right now, creating just amazing and easy trends to spot, you definitely want to join the webinar on Wednesday. It's a complete workshop, 6 o'clock Thursday night on the 8th. So let's continue to hop on over. So this is really where I think the toughest part of the system is, right? Transformation from the quantitative easing bull market to higher interest rates, inflation, and a likely recession. I'm going to get into that in 1 second. Gives us the ultimate lesson. We need to step on the gas when the road is wide open. When order flow is obvious with no signs of letting up, we need to get paid the big bucks. So essentially what we're talking about right now is very simple. You need to learn either from this year or going forward, when does market conditions call for a bigger allocation, so more share size, or when does market conditions say, hang on to that thing. I know you got a small profit and you're afraid it might be taken away, but the conditions we're looking at right now call for holding on a little bit longer. That's a lesson. But I want to go back to something over here, which is this part here, likely recession, right? So how do I come up with that, right? We're in a really nice bounce. The Dow is looking really good, right? This article came out from Vanguard last week, and it's talking about the amount of 401k hardship withdrawals as inflation is starting to really creep into daily life in a much bigger way. You know what? I'll actually post this article here in the chat so that you can keep an eye on that. So essentially what this article is saying is probably something that a lot of us are feeling right now, which is that it's really expensive to leave the house. Where gas prices have come down a little bit, and we're going to talk about energy in just a second, but so many other things, especially food, is really expensive right now. And I know the economic data said it just peaked and came down just a little bit. Essentially what this real world article is telling us is that real Americans are starting to take money out of their retirement plans to pay bills. That really says something. So you got to put the bigger picture of what's going on in the market into context of this rally was amazing. And we're going to actually take a quick look at the S&P 500 and see where we are at that particular level as well. We've actually now finally hit this level that we've been talking about now for the better part of this rally. And I really wasn't even sure that we're actually going to get up to that level, but we actually did. So this article is actually a really interesting one to take a look at. So I want to keep breaking down the argument for the ideas that we're looking at right now. So the key point here is understanding how and when to make big money. So I just want to bring this home and really make this important for you. When you understand what I'm teaching you right now, which is going through what we call that progression of the market and getting a little deeper into what we're looking at, you will understand the market conditions when the road is wide open. You're like, don't touch that small profit. And that's a really big turning point for a lot of traders that are either losing money to get profitable, or maybe you're breaking even, and now that will turn the corner for you and start to see all that hard work pay. So again, every market condition is not the same. Again, just keep thinking about driving. You don't do 75 every time you're on the Long Island Expressway. You have to pay attention, right? So paying attention is a big skill in the markets, okay? So I want to keep bringing this along, right? The transformation bringing us into a likely recession, which brings us to the second major lesson of 2022. Tape reading skills are critical. The ability to spot if order flow remains valid or if it has changed, paid well this year. And that's actually really what I want to talk about here with the market. Clearly, 2022 had a big move to the downside, right? But what's interesting is it's almost impossible for you to tell me right now that there was not opportunity. We've had so many moves in both directions that if you add all of these moves up and the percentage of moves, it's a pretty big year for opportunity. But the challenge that a lot of people had is they haven't been able to separate order flow, which is it obvious, from tape reading, which is it still valid? And a lot of people especially got hit with that really big coming into 2022 when the market changed, started this big push to the downside. They got caught, and now they're hanging on to big losses from all the way back to last year. You got to make that distinction of whether or not you're a trader or an investor. If you're an investor and looking long-term, the day-to-day kind of stuff really is not as important. But if you're watching this video, you're probably like me and a lot of people on this channel right now that are looking to increase their retirement portfolio, or maybe getting near retirement where you're just looking for that extra $4,000 to $6,000 to $10,000 per month to supplement what might be in your retirement already. And you want to be the reason that happens, not some generic alert service or anything like that. You really want to understand how to look at the stock market and take money out of the market. So now we're kind of like building the argument of whether or not we're going to expect follow through. Okay. So we're going to keep going a little bit deeper. All right. The challenge is they weren't sure which order flow they were trading, or simply didn't have the discipline to exit with a small loss, and spent the majority of 2022 hoping for a comeback. Now, hopefully that's not you right now. Hopefully you have the discipline. You understand everything we're talking about, trading being a business, right? Unfortunately, many blew up the trading accounts with the mindset that stocks always come back. That might be true for the indices, but not for all stocks, and not in the time you need them to. Okay. And again, we break this down a little bit differently. We talk about PLTR. I know a lot of people that are really married to that stock, right? Smaller acceptable losses are a part of trading that we need to embrace. Expenses are a part of any business. So why would trading be any different? So what I'm also essentially doing to you right now, you might need to watch this video one more time and take screenshots of this. What I'm trying to do in a way that I hope that can really help you is I am trying to walk you through what it takes to go through different levels and stages of trading. I hope that's what you're actually getting out of this right now. We get a lot of questions all the time about why can't you just be an alert service, like that kind of stuff. And quite frankly, I don't want to be an alert service. I want to show you how to actually be the reason that you make money. It's one thing if I just give you trades, which I do. I give you the research. I'm showing you the research every day when you're in the community. But the research is only the beginning part of understanding how to be a trader. We can have 170 people buy at exactly the same time and have 170 different exits. So if you learn nothing else, especially from today's video, which is kind of lessons from 2022 that I hope that I could give you this year, is that the entry is not as important as the exit. And that includes exiting for a loss when you're supposed to. But more importantly, especially if you want to be that person, again, at a barbecue or a holiday party where you're like, yeah, I got my stuff going on. If you want to be that person that has absolute conviction in your ability to pull money out of the stock market, to make the stock market make you money, remember this and never forget it. It's the exit that makes you the money, not the entry. You could learn to work the entry. You could do the entry in stages. It's the exit that you will get paid. But if you don't understand what we're showing you right now, you won't have the conviction to exit at the right time. That's the big thing I want to get across to everybody. Okay. All right. So So small losses are acceptable. Why would trading be any different, right? Things would look much worse for 22, except for the old school stocks that lifted the Dow Jones the previous 7 weeks. Energy, financials, and industrial started to run in October, fueled by inflation data, CPI and PPI data that makes the end-of-year numbers look less horrible. So that's essentially what we're talking about over here. So we could break this down into some of those stocks like Boeing, Goldman Sachs, JP Morgan, even Chevron to a little bit lesser degree, even though they're going sideways. We're going to break that down just a little bit more, okay? All right, so the key takeaway here is sector rotation. All right. So if sector rotation is new to you, I just want to give you I like to make things easy. Like it's like my mission in life to make things easier. Sector rotation is us doing nothing more than saying, where is money flowing into or out of in larger groups? Energy is an easy thing to go. You drive down the road and you're like, oh my gosh, a gallon of gas was $3 and now it's $3.75. We're looking now at the energy sector. Costco last week took a gigantic hit off of the numbers that inflation is supposedly saying is slowing down, which is supposedly going to make the Fed slow down. Now, remember, the Fed is not stopping. They are simply projected now on the next Fed meeting, which I believe is December 14th, to simply slow down, but not stop. A lot of people are misinterpreting slowing down from stopping. They're not stopping. There's a big, big difference. So based on that news, and breaking it down and taking a look at companies that should be rallying if inflation is still valid, Costco was actually rallying based on the fact that it looked like inflation was creeping in, right? But inflation came out in the opposite direction and Costco took a hit. So what am I trying to get across here? What I'm really trying to get across here right now is very, very simple. Sector rotation is you noticing where the price of what you normally buy is going up or down. That's the actual sectors of the companies that are producing what you and I are buying. So just try and keep an eye on that a little bit more. And obviously, we got a book back there, Peter Lynch, going all the way back into the 1980s, One Up on Wall Street, where he basically said, go to the mall. I don't even know if anybody goes to the mall anymore. I know I did in the 1980s quite a bit. Go to the mall and pay attention to the companies that you like to buy from, and then go look at those stocks. It's a little bit different now in 2022, but that's a sector rotation. Okay. All right. So breaking this down a little bit further. All right. Following order flow in and out of the stocks is the time-tested way to find new market leaders. That's another thing. I only trade market leaders. Those trading garbage got burned, and I'm talking to you, PLTR zealots. A lot of people are buying these companies and sticking to these companies because maybe they like the CEO. Maybe they have some story they like about it. But the bottom line is that the company's not making money. It's priced at $5 for a reason. All right. If you thrived in 2022, look in the mirror and be proud. That's another big thing. Be proud of your accomplishments. It's so easy for us to beat ourselves up. Be proud. This means that you pay attention, make plans, and adapt to the market. Now, you don't change your strategy. You adapt how you use your strategy with the market, which is what we just talked about with share size and holding longer. All right. I can tell you from experience that you're in even better shape than you know. So that's the big thing I want to get across here. I want to, in a really big way. And this is kind of one of those things where sometimes, we need a pat on the back, right? If you held your own in 2022, but especially if you made money this year, you are so much further along than you could possibly even imagine right now, because it feels like you got beat up a little bit. Maybe you made some money, but if you were on top of your game this year, oh my word, when the market kind of opens up a little bit and maybe you have a little bit more traction than, 5 weeks and then down in the other direction, you're going to be in really, really exciting place personally and professionally in the markets. All right. All right. If you found 2022 a wipeout, so again, we got to address everything. You need to work on your edge. You need to work on your mindset. But most importantly, you most likely need to make a commitment to making decisions and work that goes into them. You cannot think yourself into stock market success. You have to decide you're going to make a commitment to make changes because the results you were getting were not what you wanted. Don't blame the market. It's on you. Go look in the mirror. All right. And that's actually a big part of what this book is about as well, is taking personal responsibility that most people are not willing to take responsibility. It's the market's fault. It's the algo's fault. It's Jerome Powell's fault. It's the election's fault. It's none of that. It's on you. It's on us to make the changes by paying attention. Now we're going to start to break down the ideas and the actual stock picks. Okay. All right. Most importantly, make a commitment to the work that goes into them. All right. Yes, running a trading business is work. That's why we have unlimited upside. Again, get this question all the time. Trading can be hard. I'm like, yeah, but if it's organized, it's easier. Now, hard and unlimited upside, they kind of have to go together. If it was easy, none of us would have a job. So we need to learn how to make it easier within our resources. How much time do we have? How much money do we have? How much time can we watch the market? That kind of thing. Keep that in mind. All right. Now we're going to start breaking down some ideas. All right. Hard work, yes, but in my opinion, and I believe the greatest business ever. So now sector rotation. We're looking for a catalyst in sector rotation. Still most likely OPEC economic data. Let me fix that. And the jobs report will give us a little bit of boost of volatility. So we don't actually have massive earnings this week. We've got kind of a little bit of a lighter economic calendar. We do have some earnings, but nothing really to knock your socks out this week that are really big market movers. You've got Lulu and a couple of other ones, but nothing really major, right? So OPEC and oil and Russia are going to be the big things, which is why I'm going to tie this into energy. Okay. Somehow consumer cyclical stocks lead the pack last week, supported by Chinese stocks and casino stocks. So let's actually just break that down right now and do a little bit of a deep dive into sector rotation and working our way into that. So you can see the pocket of opportunity at communication services and consumer cyclical ending last week. Now, the whole week was actually okay, but we're looking from one week to the next. We're looking for patterns in buying power and buying pressure, and this right here. So now this is where we get kind of interesting, all right? Does consumer cyclical, Chinese stocks and consumer stocks scream buy to you? Not to me. Not long term. It's interesting. It's exciting. I just think that there's too much intervention in these stocks. These stocks are also being affected by what's going on over here. So no. Do I believe that consumer cyclical stocks? Well, consumer cyclical is literally stuff that we buy when we have extra money. We just talked about inflation and how it's causing more hardship withdrawals from 401ks. So the stocks that led the market last week just really don't make that much sense to think much longer term than the spike that we're having right now. Inside of that group, though, however, we have some stocks that are rallying for the holidays. So keep an eye on these. This is the big thing. Best Buy, Starbucks, and Nike. So if we hop on over and take a look at those stocks and take a look at where they're looking. So Best Buy actually broke out. Starbucks having an absolutely amazing run with the next level being up towards that 117 level. And Nike actually just broke out as well. Over on the industrial side, UPS and FedEx have also finally started to recover a little bit from the prior earnings report. Okay, so we're going to break this down a little bit deeper. All right. Coming in a close second is communication services. All right. Meta, Roku, Netflix topped the list. Google clawed its way back above 100, and Disney looking for new life with the new CEO. So now we're breaking down some of the individual stocks within those sectors. Streaming wars are competitive. Pending moving to paid ads will ultimately just become another network, right? So I'm not leaning on it. So basically what I'm saying right now is I'm not leaning on these groups other than a couple of the stocks because their long-term prospects are nothing more than just a holiday spike here, in my opinion. Okay. All right. So breaking down industry groups a little bit more. All right. Basic materials, skip past the sector list. So if we break this down a little bit more, you can see that they were positive, but not quite to the level that we'd want them to be. And you can see they're number 3 over here. So now we're kind of going up that chain of following the money in and out of the markets, right? Metals and mining are in sync with order flow and the tape. So now what we're talking about here is the bigger picture and the short-term picture. They're kind of on the same side, and we're looking for some ideas there. GLD rested a breakout level with room to go. Copper and silver aren't far behind. So essentially what I'm talking about now are the metals and miners. Gold, silver, and copper are 3 that I'm looking at. And you can see the chart of GLD here. And actually, GLD actually looks a little even more powerful on the weekly charts. When we take a look at that, you can see powerful pushes, a pause, another powerful push. So we're looking for GLD to finally get through this 168 level and see some follow through. Okay. So now breaking this down even further, looking for ideas coming into today. We have actually had some really nice, I don't know if I would say boring stocks, but certainly some stocks that you might not necessarily think and equate with some really big moves. A $25 move in the same period of time in Philip Morris. So again, you got to get off the beaten path a little bit. But Oracle is the one that we're taking a look at right now and breaking this one down in just a little bit more detail. Now, Oracle actually comes in with a pause right at this breakout level. So we got 2 choices here. I love this bullish order flow that the stock has had. The weekly chart has been absolutely amazing. But I want to see it get above 85 first. Essentially, the trade that I'm looking for in Oracle right now is I'm looking for it to finally break 85, pause somewhere here in the early 90s, and then look to make a run towards 100. Now, that's the breakdown from top to bottom of the sectors, the groups, the market. The fact that the SPY, the S&P 500, is now at the 2022 downtrend. We need to see now, can we finally punch through that? The big area that I'm going to be focusing on now, and we're specifically talking about December of 2022, is going to be energy and the metals that I just showed you. Now, energy has kind of been going sideways, but we're seeing a lot more conversations now around OPEC and Russia and oil output. That's going to be the big thing I'm talking about and focusing on for this year. And what I mean by that is where I believe the biggest bullish trend that could potentially happen for now into the rest of the year is in energy. So that means that I'm going to be looking at the large cap energy stocks such as Chevron, Exxon, and that group. Now, where they've been recently, and again, breaking this down over here into the sector rotation from one week to next, you can actually see here that energy has really got nowhere, right? However, a pause does not mean it should be off the list. We are simply now waiting for this trading range here, which is now that 4-week trading range, which is actually holding this breakout level. Can this breakout level of 177 or so hold? If it does, I believe that the next move in these large cap stocks are going to end up being a next move higher. So one of the biggest things that a lot of people have a problem with is it's not moving at all. Therefore, I'm not watching it. And that's a mistake. We have to continue to monitor order flow. And there's a difference between a change of trend and a potential change of trend. And I'm going to show you General Electric as an example when we're looking at that, where General Electric actually rallied. And I want to bring this out here, where hopefully you've been trading this because we've been kind of talking about it pretty much every day, where we finally broke this long-term uptrend going back to mid-October, but we did not break the trend. So General Electric is still a valid long. It's just stuck in this box right now. So this is generally where money goes to die, when you overtrade in a pause, but then you give up on this good move. So these are the kind of things that we need to pay attention to. So I'm still watching industrial stocks, which means Boeing, Caterpillar, John Deere, to a little bit lesser degree, FedEx, UPS, and 3M. Industrial stocks have been really strong. Boeing had great news last week. If you didn't happen to see the move in Boeing last week and why we should be paying attention to that one. This is the, excuse me, get Boeing here. Boeing had some news midday and actually had a $5 rally in the middle of the day. But more importantly, if we take a look at this weekly chart, this was the big level that we were looking to get through. So again, energy stocks waiting for them to break out of this 5-week trading range. Industrial stocks looking for them to continue. Financial stocks, I'm not leaning on them as much with the specter of interest rates starting to come down a little bit. That's a big reason that they rallied. And then working our way over into metals and miners, specifically if you want to do a little bit of a deeper dive, we're looking at gold, silver, and copper. Those are the three groups in basic materials that I think have the larger move to the upside coming up for the remainder of December. So hopefully this was good for you to break things down. I like to show the process and then ultimately getting to the point how that process leads to conviction and how that conviction leads to which stocks I buy, what the targets are, and what kind of risk I'm willing to accept on those ideas. All right. So let's see. Fran's talking about airlines. Yeah, we actually airlines and cruise lines, actually. If we break that down a little bit deeper, let me actually pop that in there for you and just put this up on the screen here as well. If we break down UAL, we actually have a nice push and a pause with some room to go here. And actually the next level's kind of up in this area over here. So almost $10 in UAL as well. Breaking down Delta as well. And you can see Delta has some room to go as well. But I think one that we've been watching quite a bit recently ourselves has been RCL. And again, some of the boring stocks, they're taking off and giving some room. And you can see RCL actually has another $15 to $16 up towards that $84 level. All right. So a lot of good stuff going on. Hey, William, how's it going? I hope that you're feeling better. I know you and I both had some eye surgery issues. Hope you're doing better. And yeah, you're right. Actually, GE and Boeing both moving together as well. So good call on that one too. So love doing the live streams, everybody. Watch this video more than once because we really broke down the process of how to get to where you have conviction. But more importantly, that beginning part was about the right mindset. All right. Thanks so much for joining me here today, everybody. I will speak to you soon. Have an awesome, awesome week. Economic data a little bit later in the week. So we'll take what's available early in the week. Hopefully that economic data later in the week will give us that big push for some bigger money. All right. Have an awesome day, everybody. Want you to know how much I appreciate your time we spent together. Take care now.